from a macro perspective, the environment is different from what we've seen in the past, right? I think people can argue that there are cycles, every now and then it's very normal. But this one feels different. I mean, if you just look at sort of the interest rates in the US, they've never been this high. It's unusual. So in that sense, it will definitely impact borrowing, and that definitely impacts liquidity in the market, right? So, but if I have to apply the private markets lens, then at least in India, as you rightly pointed out, there's enough dry powder at the early stage. But I think there's more crunch at the growth stages, where we've seen when it comes to larger checks, economics matter a lot, performance matters a lot. And while there's still money, the money is very selective. It's really at Series B, C onwards where conversations are starting to get more and more difficult, where there has to be very clear, clean PMF, where you need to be able to show unit economics working. The bar on that is just far higher today than it was, 2 years ago. We're also seeing sort of a change on the supply side, where you're seeing sort of fewer founder startup. I think that risk appetite, even from the founder's perspective, was a lot higher in the last 2 years because there was liquidity across stages. At this point, it feels safer for a lot of people to stick to their jobs rather than, step out into something new and take a risk where where they may or may not be capital available 2 years down the line, right? So unlike what we've seen in the last 2 years. So net, I think it's an environment of cautiousness all around, both on supply side, demand side, and across stages. SaaS is exciting in any market because sort of every downturn makes you realize that there is a need for more efficiency. And so more ideas and opportunities always come up. From a consumer standpoint, look, the reality is that wherever there is a pain point, that market is still open, right? So fintech can always get better. If anything, this market has made you realize that in India, and if you look at wealth tech, for example, there is enough solutions if you want to be on the risk side of investments. So if you want to do equities, mutual funds, but if you want to do more capital preservation, then there is actually not enough products out there. I think several small businesses from a lending standpoint are still viable, but are probably finding cost of capital far higher. So a lot of new interesting lending models can emerge. Again, if I put that in the bucket of debt financing, then it also ties into wealth tech in some sense. So I think fintech still has a lot of opportunity in any market.